Hey guys, you've joined us live on Moneycontrol. I'm Manisha Gupta and the focus is on sugar, where a lot of reports, a lot of conversations happening right now on where the prices could be headed in 2024. And of course, if last year was a slight surplus, are we looking at break even or are we looking at a deficit this year is something that we are reading a lot of polls on. But just to get a sense on prices, first of all, if you look at the last 1 week in the global markets, the raw sugar prices have declined by nearly 5%. In this year, in the last couple of months, though, the prices still are nearly 10% on the higher side. Let me take you through that graph though. On 1st of Jan, the prices were at 20.90. We did see prices jump up to 24.4 on 24th of January, and then Feb 16, that's today, we're trading at around 22.9 on your screens right now. Well, there are various factors which the markets are looking at. One is, of course, the production in Brazil is expected to increase by 11% as compared to previous year. And the other thing is that the crude oil price is trading at around $80 a barrel is another point that the markets are taking in confidence right now. The other thing to watch out, of course, is going to be the global consumption, which is expected to increase on a year-on-year basis. Here as well, India is expected to drive that demand growth. And the other thing clearly is about India being the second largest producer, but is totally absent from the international trades right now. If you look at the overall balance sheet then, while last year was a slight surplus, but for this year until now the expectations are that you could be looking at a 7 lakh tons of a deficit in the global markets right now. So putting all of that in focus, and joining us for that is Rahil Shaikh from MEIR Commodities. Rahil, hi, thank you so much for joining us, and so much conversation happening on sugar. I want to first of all talk about the international markets itself. With the price move and the volatile big range that we've seen until now in 2024 already, what's your sense on what are the factors and where are prices headed?
Thank you, Manisha. You see, the main factor, Manisha, remains Brazil. Brazil is catering to 90% of the world's supply today in absence of India, a very bad crop in Thailand, and I mean, rest of the world we stop counting. But I mean, today the main three factors are India, Brazil, and Thailand. Thailand crop, we all know, is bad. Brazil have produced about 9 million tons more than last year. And that's the reason why you saw the volatility in last year when the market went up to 28 and then came down 20 and now back to 24 and now 22. So next year we don't know what Brazil is going to do. So 24-25 crop from Brazil point of view is not assessed properly. The reason is December, January there was a weak rain in Brazil and the soil moisture have come down is down currently. So we don't know whether it's going to be 620 million ton of cane crush again or it's going to be 575. So the range is now widening, and that's the reason why you have this volatility in the market. So I think the main factor is Brazil. If Brazil gives any shocks, then there is no shock absorber in the world. So I personally believe that the main thing to watch is Brazil, and then the most unknown is the funds. I think we saw them liquidating about 180,000 lots of sugar, which is, one lot is 50 metric ton. So we are talking about 10-11 million ton of sugar being liquidated by them. And now they have only bought about 23,000 lots, and the market is up by about 2.5 cents in this 45 days of the new year. So I think these are the two factors, and then demand, ever increasing demand in our view. I think, certain part of the world may be under recession, but I mean, you look at the developed economy and countries like India, Iran, you have consumption increasing in Indonesia. I think China is one of the reported point of increase in consumption. So I think these are 5 points which I think we'll have to monitor. But the most critical is fund and the Brazilians.
Absolutely. So, Rahil, when you say that there has been a huge fund liquidation that we've seen, and that clearly has led to where the prices are right now, how would you look at funds? What is it that will move them back into the space?
I think they like the volatility. So I'm sure they will come in at certain point of time. And I mean, the most unknown about funds are where they are heading, and it's mostly a technical study by them. So I think I have a very strong feeling that if the rains in Brazil are being talked lower and lower for the next, and the soil moisture reports keep coming out, I think that will be the trigger point for them. And the other trigger point for them, I believe, is the consumption side. You see, in the last 2 years, because of the high freight regime, most of the countries have consumed the stocks which were available with them. So the world is staying with a very, very low scale of stocks. So we were expecting that the stocks which were around 35, 36, 37% in the world is now reduced down to 20 to 23. So if the restocking happens, then I think that will also be one of the trigger point for the funds to come in. But Brazil and consumption, you take these two as their key point, and always, I mean, technical studies by the chartist, I think that is one of the points where you'll see them back.
Coming back to Brazil, and of course we do understand that this time around they favored sugar more than ethanol, and that's also because you have seen the crude oil prices kind of stabilize below that 90, even $85 for that matter. How dynamic would you say movement from Brazil can be?
You see, Brazil last year produced 9 million tons more because the ethanol prices in Brazil were around 14, 15 cents and sugar was around average on around 22 cents. So there was no brainer for the Brazilians not to maximize the sugar side. And I think current scenario, while we talk as well, is a very similar situation where you have ethanol parity at around 13 to 14 cents and sugar at around 22 cents today. So I mean, there is no brainer for them. They will maximize the sugar. But please understand, they have a problem of crystallization capacity. They can't convert 100% of their sugar cane into sugar directly. So they have the problem of crystallization capacity. So we expect that this year they maximize around 41 million ton. If they have to do, then they will produce 41 million ton if they utilize the entire crystallization capacities.
So going forward then, Rahil, what's your sense on the prices? Because there is a very divided street on sugar prices for 2024. There are some who believe that it could be a 20% of a run-up from where we are trading right now, and the others believe that it could be lower than of an average from where we were in 2023. What camp are you in?
I think, markets are driven by demand and supply. And I mean, given the price band of 20% volatility on the upside or downside, I personally have a feeling that the biggest unknown is the Brazilian crop next year. And if that number is below 585 or 575 and cane crush, then I think the market should remain constructive. And if the numbers are going to go back to around 625, 630, we should see a neutral market. I don't see market collapsing down by any standard. The reason is there is enough demand, and if you see the structure of the market, it's inverse. It's showing that the demand is there in the market, and I believe that the world is dependent on Brazil. Just imagine an essential commodities being driven by one country for a 90% of its supply in the import-export trade market. So I think that's the benchmark. If you have one evergreen episode, you have a truck strike, I mean, people will be looking for sugar. So I believe that watch out for Brazil rather than the prices. Any shocks from Brazil, the prices will remain constructive.
Coming to India then, Rahil, and there was supposed to be a review in the month of January as far as ethanol diversion or exports as a policy was supposed to be relooked into. Jan was an absolutely silent month in that sense. Feb, half of that is gone. How would you look at the Indian policies?
Indian policy is hard to determine at the moment, Manisha. I think one is if you look at the domestic prices, it has come down by about 3,000 rupees per ton, or 3 rupees a kilo. So Maharashtra, which was trading at around 36 to 37, is now down to around 33 and 34 rupees. So UP is maintaining the price around 37 rupees. So I mean, everywhere in the country, I mean, the prices have come down. Anytime the prices comes down, you bring back the cyclicality. So the cyclicality was farmers area, climatic conditions, and government intervention. And all these three are currently in the play. As far as ethanol is concerned, I think the review is needed. The reason is, if you look at the simple supply and demand as per the government numbers, we don't talk the trade numbers, we don't talk the association numbers. The government is saying that they have 5.8 million tons of opening stock. Now, after the ethanol fiasco, we will produce about 31.3 on a hard number, say 31 if even there is any shock in Maharashtra. So we are having around a supply of around 37 million tons. If we consume 29 million tons, then we are left out with 8.1 million ton of opening stock. What do we do with excess 3 million ton of sugar? So it's much better if we start to review now and allow a million ton of diversion, then you are lowering your stock. Even, the world market won't like any exports to be discussed now. You will see a collapse there as well. So in my view, it's much better that the domestic prices have come down to the level where there is comfort to the government. It's below cost of production for many part of the country, but it is what it is. So I mean, there should be a review and a clear-cut discussion to allow a 500,000, a million ton of diversion now, or probably, then it will be too late if the sugar mill starts to close down. Then we will have no other option but to carry on with this 8 million tons of closing stock, which is 2.5 million tons more than what we need as our closing stock.
A final question, really, Rahil. For some time now, for the last couple of years, for that matter, with the kind of ethanol policy that we've seen come in from the government, it has been a very sweet ride for the sugar stocks in the Indian markets as well. But the last few weeks has been slightly jittery, last couple of months for that matter. How do you look at that space now?
I mean, the ethanol story is not dead. So I mean, the government is committed to that subject. So unless and until it's not dead, the industry should remain sweet. I believe that the government will take some decision in favor of the industry, because at the end, if industry suffers, the farmer suffers. The farmer suffers, the consumer suffers. So it's a chain. So I mean, personally speaking, I have a strong feeling that till the time the ethanol story is not dead, we are still in a sweet spot in the sugar.
All right. On that high note, Rahil, thank you so much for joining us. Well, that's the view coming in for sugar until the ethanol story goes on. And it would, because that is a long-term vision from the government. It's a support there. But at this point in time, ensuring that there's enough affordability and availability is the step that the government has taken. And that, of course, is the view on the Indian and the global sugar space.